Hey everyone, and welcome. Let's just jump straight into it, shall we? At the very heart of any business, I don't care if it's big or small, there are two fundamental journeys. Think of them like the twin engines that power your entire operation, the journey of what you sell and the journey of what you buy. Today, we're going to get a real handle on them.
I absolutely love this idea. It basically says that sales and purchasing together are the business's 0 to 100 journey. What a great way to put it, right? One path brings all the money in, and the other carefully sends it out. And to get from that 0 to 100, you need both incredible speed and perfect control. You can't have one without the other.
So let's kick things off with that first engine, the sales journey. This is the exciting part. This is the whole process that takes a customer saying yes and turns it into actual hard cash sitting in your bank account. And honestly, it's simpler than it sounds. It really just boils down to 3 logical steps. First, you get a sales order. That's your customer committing to buy. Next, when you ship the goods, you create a delivery note. And then, just like that delivery note automatically becomes your sales invoice, the bill you send to your customer. You see that beautiful flow? Each step just leads right into the next.
And that right there, that's the magic of it. When all these steps are linked up, you can track a single order number from the moment it's placed all the way to the final payment. There's no guesswork, no digging through files, just a smooth, seamless conversion from an order into an invoice.
So what does all of this activity create? Well, it creates something called Accounts Receivable, or AR for short. Let me break it down. It's simply the total amount of money that all of your customers owe you at any given time. And believe me, that number is absolutely critical to the health of your business.
Which brings us to a question that every, and I mean every business owner has to be able to answer in a heartbeat. Who owes you money, and for how long have they owed it to you? A properly managed sales cycle, a connected system, gives you this answer instantly. It puts you in the driver's seat of your cash flow.
All right, let's flip the script. We've talked about money coming in. Now let's look at the other side of the coin, the purchase journey. This is the mirror image of sales, and it's all about how you manage the money that's going out of your business.
And guess what? Just like the sales cycle, it's a nice, clear 3-step dance. It all starts with a purchase order, a PO. That's you officially ordering from your supplier. Then, when the goods show up at your door, you create a receipt note to say, "Yep, got 'em." And finally, you log the payment with a purchase voucher. Simple.
And this cycle creates its own important number, Accounts Payable or AP. And again, it's not complicated. This is just the total sum of money your business owes to all of its suppliers. Managing this is just as vital as collecting what you're owed. Now, why is this so important? Because a structured purchase cycle gives you total control over every single rupee going out. By linking your payments directly to what you've ordered and what you've actually received, you make sure you never overpay. It's like having a security guard for your bank account.
So let's just look at them side by side. It makes it crystal clear, doesn't it? The sales cycle is all about tracking money coming in from your customers, and the big goal is to get paid faster. The purchase cycle, on the other hand, manages money going out to your suppliers, and the main goal is to control those expenses. They're two halves of the very same whole.
Okay, so we've got the basics down, right? The in and the out. But now we get to the really smart stuff. This is about using all this control to make much smarter and way more profitable business decisions.
For example, think about it. Not all of your customers pay the same price, do they? Of course not. You've probably got wholesale pricing for the resellers who buy in bulk, and then you've got standard retail pricing for your regular end customers. A smart system lets you set up these different price lists, so the correct price gets applied automatically every single time. No mistakes, no manual work.
Now, let's switch back to the buying side for a second and ask a really important question. What is the true cost of the stuff you're going? Because I can tell you right now, the price your supplier charges you is almost never the final cost. To get the real cost, you need to figure out something called the landed cost. You start with the item's purchase price, then you have to add in the shipping charges, plus any duties or taxes you had to pay, and that final number, that is the true all-in cost of getting that item into your hands. Knowing this is absolutely vital for pricing your products correctly and understanding your real profit margin. So let's bring all of this together. We've looked at the journey of money coming in and the journey of money going out. The final step, the real goal here, is to achieve complete control over both of them at the same time.
And really, it all boils down to this one powerful idea.
When you manage these two essential cycles, your sales and your purchasing, inside a single integrated system, you get something incredible. You get total control over the financial engine of your entire business.
So I'll leave you with this one thought to chew on. In the real world, your sales and your purchasing are connected every single minute of every single day. The real question you need to ask yourself is your data? Thanks for tuning in for this explainer.